Hello there and welcome to Commodities TV. Today we'll be discussing a topic very important to commodity traders and in particular sugar traders, the sudden drop in the price of the barrel of oil. Joining me to discuss this is Lionel Rossini. Welcome, Lionel.
Hello, hi, how are you?
So firstly, have we reached the bottom when it comes to the price of the barrel of oil, or can the price drop further?
But there are two different ways to look at the present situation in the oil industry right now. If you look at the fundamentals and if you look at what happened, the funds went out of their long position and they sold their position, which has accelerated the drop of the price. And if you look at the fundamentals, normally the price should not go lower than that because we are seeing a lot of support. But if we look at the oil situation, not on fundamental terms, but politically, if you look at the way that Russia and America are at war on that particular product, having Iran as an ally for Russia and Saudi Arabia for the Americans, we can think that the situation can get worse. And for personally, I am of the opinion that the price of oil can still go much lower than present level. Then, but having said that, most of the people think that we have reached a bottom because at this price level, a lot of support is coming and people are buying the petrol. But the thing is, Saudi Arabia and are still producing a lot. They are not stopping the production. Then they are the largest exporters of petrol. Then they can really influence the price. And I think that the price should go much lower than present level.
Has this had any influence on the drop in sugar price?
Alors, not directly, but indirectly, because actually the drop of the price of oil has reduced the price of the bunkering. Then cost and freight price of sugar to destination as lower, but it's more the strength of the dollar which has followed the drop of the price of the oil, which is making the sugar going a bit lower, weaker. But having said that, the link is not that strong. The elasticity is not that big.
So let's look a bit closer into the sugar landscape. What's happening there?
Alors, after all those years that the sugar price was very high, historically high, 3-4 years ago, a lot of people has entered the market to produce more sugar, and now we are facing the consequence of that. We are structurally in a bearish market. The price of sugar is weak. It has difficulty to hold, and we've seen a drop, quite a dramatic drop in the last 3-4 months, and now the situation is a bit stabilizing. But again, having said that, we are also in a period of intercrop in Brazil. We are finishing the first crop, and the next crop is going to start only in May. Then maybe this period will allow the sugar price to stay at this present level. But I believe that by October, November, when the Indians start having figures on their own crop, we might see that the price of sugar is going to drop again, because the demand also in sugar is not too much. There's a lot of reserve, large stocks of sugar at destination, and we've seen a lot of vessels being floating, not finding homes. Then basically these are all bearish signs. But at the same time, this seems that the funds, which are a big player in the futures market, in the sugar future market, they want to hold the price and they want to defend their position, and they are defending the price of sugar, and which is stabilizing for now. But for me, I think that we might see a major change in the price, a major drop in the price in the near future.
It's certainly an interesting time for the sugar markets. Thank you so much for joining me today, Lionel.
Thank you for the invitation.
Well, that's all from here in our Geneva studio. Do keep clicking back to Commodities TV for regular updates and exclusive interviews. Bye for now.